The views, opinions, or advice offered by this show's host do not necessarily reflect those of News Talk 780 KOH or its parent company, Cumulus Media. This is Bosma On Business with award-winning entrepreneur Mike Bosma, sponsored by Keystone CPAs. We're getting Northern Nevada back to business.
Today's installment of Bosma On Business is all about some of the good, the bad, the ugly of selling your business. And, it occurred to me, originally had a guest for today's show that got COVID. So, of course, that's, is that the current way to politely bow out of a Saturday morning interview? Oh, I've got COVID. Achoo. Yep, sorry. Remember back in the good old days before 2020 when you just had a sniffle and you sucked it up, buttercup, and you just did what you're supposed to do? Not anymore. It's the enlightened period for anything. Anyway, so rather than have the guest, I said, hey, I had some intense conversations this week that I want to debrief with you. Of course, if now that we're in tax filing season, if you need some help, guidance, phone lines are open, 852-8255, 1-800-564-KKOH. Get in early. We don't want a rush at the end. You got questions. How does this stuff work? I had it is fascinating to me. The things that we take for granted, and so this first little snippet. Talk about I had an initial interview with a prospective buyer and a seller that's my client, selling a paving company. And neat story, but it occurred to me, no matter how much coaching you give a seller, where the buyer is going to try and figure some things out. And I thought I would just share that with y'all, and then I'd have an archive of it. So rather than spend an hour coaching people on what the buyer's going to be asking and what they need to think about saying in response, I could just point them to the online audio of the show, and it'll be good, entertaining content for you, I believe. Anyway, we'll see how that goes. But yeah, if you have questions, tax questions, financial advisory questions, business broker questions, or just questions in general about the subtle, slippery slope that we're on regarding when you get a sniffle, 775-852-TALK. That's 8255 if you don't have letters on your dial pad. I think that might be a little antiquated. Anywho, all right. So, as I mentioned earlier, I had a call yesterday with a client that I'm selling his business, paving contractor, and I realized that it's very hard for when you're selling your business to try and disassociate with you being the crux of the success of your business. And I'm just going to recant this dialogue between buyer and seller. And so it was fascinating to me, and I'll tell you why it matters here in a second. But so the buyer asked the seller, so do you go out and walk each job site? Now, if most buyers, the reason that they ask that is they're trying to figure out how they're going to run this company once the seller retires. And so they need to know really tactically what the seller does every day. Now, the best answer is like, no, I have this guy that walks the job site every day, or this gal, this is a person that walks the job site. I'm sitting here drinking my coffee with my boots on the desk, doing the daily puzzle. That would be, you got to have a fact pattern that matches up with that. But the owner, when asked the question, so do you walk every job site every day? And he took it as a personal affront, the buyer did, or the seller rather. He said, no, of course I do. I'm diligent in what I do. I walk that yard. I'm like, oh goodness. Because the buyer is, all he hears is, there's no way to be successful in this business because we're remote buyers. We need somebody that's left behind that can do the work. So, in a similar vein, the wife also does the books. I don't know why it always works out that way. the one spouse entrepreneur, and it could be a male or female, doesn't matter. But the other spouse, they always get roped into doing the books. Why? Because it's free. They're already paid for. so then say about the finances. So how do we pay bills? And ask the wife. So how involved are you in the finances? Again, the best answer would be, oh no, I have my bookkeeper. They do really the heavy lift, and if they have a question, they ask me. Best answer ever. Of course, you have to have the facts to support the answer. So, and I realized that many, even of the best coached sellers, don't understand that the only way that for you to sell your business is the buyer has to be able to operate the business without you there. Now that seems very just you should figure that out on your own. But it's just most people don't understand because they're so inextricably connected with their business. They can't imagine their business without them, which is why it's so hard to sell until and why now that there's hardly any businesses for sale. Like I said, this we've had this listing for we've had it live for we got an offer on it less than 2 weeks after we listed it. It was just they go quick. You got to pay attention. Got to get skippy with it, and quality deals are hard to come by. So, but that's where it's like one of the things I was just trying to share with you this morning is, how to maybe go through the process of extricating yourself. I call myself an escape artist. You're trying to escape from the clutches of your business that you created, right? So, and you just have to think about it differently. And I think a lot of business owners, I am one. I love business owners. We're the salt of the earth most of the time. The rest of the time, not so much, but most of the time, good people really trying to do good things and make a buck or two in the offing. But what I thought I'd share with you is, as our business, our CPA firm has scaled up, the process that we are going through, the really the metamorphosis of the building to get to the next level, and those things are what is going to make your business sellable, right? If it's scalable, it's sellable, and you have to invest in systems and processes that sound awful boring. They don't sound like anything like going and selling things or anything like doing what you do. It's just back office tomfoolery that's required. And the good news is today that we have a software. It's called Trainual. I'll repeat it, Trainual. They're not a sponsor. That is not a paid endorsement. It's just free. But Trainual is a good platform to help you organize your thoughts on how to run your business. And ideally, if you had a Trainual application, basically it helps you organize your thoughts on how you do different things and what are the different parts of your business. Well, you have the thing that the business owner is probably most passionate about is whatever product or service that you sell. That's what you have, and that's usually not the problem. By the way, there's people left behind to do it. Unless you're a solo entrepreneur, then if you got other people can do what you do, and that's kind of the whole idea. But how do you document all? Where are the passwords for the QuickBooks file? That kind of stuff. Right? So and so there's a process. It's all baked in Trainual that you document all this stuff, and it's not hard, especially now with screen capture, with Microsoft Teams, Zoom. All you got to do is just create a Zoom session or Team session with yourself, hit record, and share your screen, and then it'll follow your keystrokes so that then you can have a repository for all this wonderful how you run your business organization. But as I was having this interview with the buyer and seller yesterday, it occurred to me that most business owners, I don't know why it's maybe it was a hard week, so maybe I wasn't as perky as I normally am, but I just recognize that people have been running their business really so efficiently for so many years, they don't even think about what it takes to run their business. And when we come back, what we're going to talk about is the ABCs, 1, 2, 3s of the basic components, the basic building blocks, how to identify them, get them documented so you can sell your business and go have a margarita on a beach somewhere where it's warm. When we come back, it's Bosma on Business. Newstalk 780 KOH. Welcome back to Bosma on Business. Your host, Mike Bosma. It's funny. I'm just in the KOH studio looking at the call screener for the garden show, and it's a different show than this one. How do you deal with voles? Question about carrots. Do you care at all about carrots? Well, what hopefully you're going to care about by the end of the show is, things you need to do to buy a business or sell a business. And if you're trying to sell it, how to be able to organize your affairs so that somebody sees that there's something there worth buying. And I guess, and just to be able to share just kind of some fun and I believe interesting stories about a number of the transactions that I'm currently working. I've got three transactions, all concurrently running, all are in letter of intent, and working to get to the definitive agreement. So just for the benefit of our listeners, if you're wondering how to get from, I have a business, and then how do I decide? Let's say you want to buy a business. What's that process? Well, that process, if you're going to buy a business, is in fact, I had one of our listeners called in, which I appreciate it. Got one of those free 1-hour consults, and said, "Hey, I have my boss has asked me to buy his business. He does about $4.5 million a year in sales, and wants to sell it to me for $3 million." And I said, "Okay, that's good." He said, "I need some help because I've never bought a have never bought a business before." I'm like, "Okay, party on." So I said, "Well, this is the process. First, we're gonna sign a non-disclosure agreement, NDA, and that's gonna assure the seller, your boss, that we're not going to get all of his confidential business information and blab it all over the internet, right? So because there's damages that are provided in the NDA. So we're just like, nope, we're not going to do that. It guarantees that we're going to keep this hush. It's the first thing you sign an NDA, and then we're going to get their information, last 4 years of tax returns and the current status of whatever 2023 is, because it's not done yet, because we're only halfway through the first month of 2023. Nobody has their taxes done, but they should have some kind of line of sight on where their plane was going to land for 2023. And just get those, and then we do evaluation. We have a software that is called BizComps that is basically a database we paid to have that does these valuations. It's in essence the SBA database. So it tells us every SBA deal. That's most of the stuff we do, anything $5 million and less. Although I 2 of the 3 deals I'm running right now are more than $5 million. But be that as it may, it's a database for most people that, if you're making $1 million a year, your business is going to be worth $3 million. If you're making $300,000 a year, the business is going to be worth some $800,000-900,000-ish. And it just shows you all the sales, multiples of sellers' discretionary earnings, multiple of EBITDA, sales multiples, revenue multiples, all that stuff. And you can just see the transaction history. And that's like what everybody's afraid of, right? If you're selling a business, you're afraid you're going to sell it for too less. If you're buying a business, that's where the real paranoia sets in. You're going to pay too much. You won't be able to pay to buy the business. So, in this case, I said, if we're just going to get it. He goes, "Oh, well, the seller's not going to give us any financial information." And I said, "Well, he has to. You can't buy something you don't see it." "Oh, well, he's not going to." And I said, he said, he said, he's going to get that information to me in June, on June 1st, and then we'll be able to close by July 1st. I said, "That's impossible." And he goes, "Well, why is it impossible?" I said, "Because as you go down this trajectory for selling your business, NDA, do the appraisal, and then you have to give what's called a non-binding letter of intent or an offer, right? Just kind of bullet points. Hey, I want to buy your business. This is what I'm going to pay for it. Now, if the seller thinks it's worth $3 million, that's good. And of course, when I do that valuation, if it's worth $5 million, I'm going to absolutely pay $3 million. I represent, in this case, the buyer. So if he only wants $3 million, God bless him. We're going to pay him $3 million, give him every penny he wants. But if we got a problem, we're going to talk about it. And that's usually where, I swear, every day I help navigate problems and really help fix problems, and be able to bridge the chasm that's created when we have problems. But we can't even, you can't even know if you're going to want to buy this business for $3 million until you see the information. And it's going to take you a minute to, they want the SBA to finance it. The SBA takes 2 to 3 months at best. And that's if everything's perfect. And I haven't even looked at your stuff yet. They have to do their own valuation. I mean, we're talking, talk about bureaucracy. You're going to go through the SBA, ergo the government, and a bank, ergo a quasi-government organization. I mean, it takes time. It takes time just to get the loan submitted. Then they got to get the thing approved. So it's going to take a minute. It's just what it is. So it's we need. I told him, it's like if we want to close by the end of June, we need to start now. It takes time. And often, and he said, well, like, is it your time doing the valuation? So we turn stuff around quick. But what's going to happen is I'm going to do that valuation for you, Mr. Buyer, and then it's going to take you a minute to digest it because it's a fair amount of information, and then you just got to get your mind around how this thing is done. You're learning something new, and anytime you learn something new, it takes time. Your brain has to be able to understand what it's looking at. Okay, this is how it all works, so that you can digest it. So you're like, okay, this is why it's worth paying $3 million in this case. And so, it was interesting, and he said, well. So he said, okay, then what? So I said, well, the process is non-binding letter of intent. Go from non-binding letter of intent to definitive agreement. Usually these things are all asset sales, so it's an asset purchase agreement. And I said, the buyer always does the legal. So he says, well, I think this, the seller, his boss, in this case, he says, we're just going to use a business attorney. And I said, well, this is why you don't want to do that. So, and basically what I'm doing is I'm giving you all the value that this gentleman got in his consultation. You get it for free here on Saturday morning. So he got his consult for free, but that was a one-off. We're trying to make this a little bit more scalable because I have it's the same conversation every time. I want to buy a business. How does this work? Same conversation. I just point him to the podcast. It'd be great. So I go... I told him, I said, well, so you go asset purchase agreement, but the buyer always does it. He said, well, the seller wants to use his attorney to draft it. I go, the problem is it's going to cost your attorney, and you need an attorney, it's going to cost your attorney more money to rewrite that contract because now we're using their crappy contract because who does it protect? It protects the seller. I go, so it's not going to have any protection in there for the buyer. It's going to say the seller's not made any promises, and if things go downhill post-close, too bad, so sad. And that's not going to work for you, Mr. Buyer, because you need all of the customers, the profits, the employees, all of it to be able to pay for the thing. So you need representations and warranties in that contract that are going to protect you. So that's why the buyer's attorney and the buyer always bear the cost of drafting the agreements, and you got to pay the freight. So draft the agreement, and then you're going to give that to Mr. Seller, whose attorney is going to vehemently object. I object. Oh my goodness, we've made no promises. We've made no such claims. I'm doing my very best Colonel Mustard voice for the Clue game. Anyway. The perpetrator of this most heinous crime, is like when they talk about the asset purchase agreement they get back, and then they say, well, you can edit to your heart's content. But now they're using the buyer's document and to navigate. And because the buyer's at risk, right? The buyer's walking in blind. They don't know anything about this business. They need assurances that everything's going to be okay, that there's no litigation that hasn't been disclosed, that, the boss isn't sleeping with the secretary, all that kind of stuff. And if there's a problem that creates liability for the purchaser, it's called successor liability, that we're going to get skippy on that. So we're going to have reserves to take care of that. So if I have a problem, the best way to explain it is this. In that asset purchase agreement and the letter of intent, it's going to say, let's say it's a $3 million deal. We're going to hold back $300,000 in escrow as a reserve, and that's the typical amount, 10%. We're going to hold back $300,000 in reserve so that if all of a sudden on your way out of the business, you didn't pay the company's largest supplier, and then when the first day you open up the business and it's yours, and you call the number one supplier and say, hey, I need some more supplies. And then he said, well, you got to pay that last bill. You go, well, I'm a different company. And the guy's going to say, I don't care. Same name of the company, same address, no checking, no pay, no shippy. So then you call the seller, like, hey, this guy's saying he didn't get his last invoice. He goes, oh yeah, that guy's always been a jerk, so I was going to cheese him out of last payment. Well, guess what you're going to do? You're going to say you're going to make the payment, right? And then you're going to take it out of his $300,000 and you're holding an escrow. That's the stuff. You see this stuff all the time. And the guys, and that's where that's how you have these, somewhat terse but real conversations between buyer and seller. Is like, hey, Mr. Seller, you're not going to do that, right? You're going to pay all your bills. Okay, well, this is how I know you're going to pay your bills, because I'm going to hold back, and if you don't, we'll pay them for you. But don't do that. You do you. In fact, most deals, because of that, most transactions, they have what's known as a working capital that is included in that valuation. And that working capital is not, depending on who you ask, but not necessarily usually zero cash, but always receivables, inventory, and payables. So because you want to make sure that all those vendors are getting paid. And so that's the ABCs, 1, 2, 3s of if you're buying a business, that process you go through. Then you get to the definitive agreement, then to close, and then post-close. When we come back, I got a tax tip or two for you. Phone lines are open, 852-8255, 852-TALK. If you got tax questions for this tax season. It's Bosma On Business, News Talk 780, KOH. Welcome back to Bosma On Business. Your host, Mike Bosma. Just talking about, the things you got to know if you're buying or selling business and just how it works, and just realize there's really no repository for this stuff. So just trying to make our listeners a little bit smarter about it. Of course, the bottom of the hour, we always do a little tax tidbit. January 15th, this last week, was the due date to pay your fourth quarter estimated tax payment. A lot of people ask me, it's like, especially if they had a big, they sold their business 2023, do I need to make an estimated tax payment on that? And generally the answer is no. You don't have to pay that till April 15th. And especially now with interest rates humming around 5%, you can make a buck or two in interest if you sit on it. So I'd say sit on it. But the reason that you don't need to make an estimated tax payment on January 15th if you had a whole bunch more income in 2023 is that as long as your amount of tax that you have paid in is at least 110% of your 2022 tax, there's no penalty, even if you're millions of dollars underpaid. So just make sure you've covered the prior year, and if you've covered the prior year plus 10%, you're golden. But it will be due on April 15th. The other thing that is on tax land you got to be smart about, the penalties are becoming rather onerous for failure to file these informational returns. So basically what our government has done now, that's us, by the way, we're a representative government. So we elect our officials who do our bidding for us in Washington, D.C. So if you have a complaint about all the above, contact your elected official. But 1099 miscellaneous, 1099 NEC. Those are things that if you pay independent contractors, you need to file 1099 NEC. If you pay them, obviously if you pay them more than $600, so if your business pays somebody for services more than $600, you got to file 1099 miscellaneous or 1099 NEC. That's due at the end of the month. That's due January 30th. Now, the reality is this: that's due to the recipients by January 30th, but it's not due to the IRS, so it's not past due until the end of February. So there's a little bitty hack there for you if you're struggling getting the information to file these things. It's not you're not going to be penalized but you get a month grace period. But one of the things that I would also say as far as business hacks go, whoever's your bookkeeper, whoever's doing your accounting, and if you're scrambling right now, getting all the information for your 1099s, remember what I said on the first segment about having all these systems and processes documented? Have a process for onboarding vendors. And it's not complicated. It's not it's not the standard operating procedure that lived in a binder that was, 3-ring binder that was 4 inches thick that lived on top of your desk back in the olden day. It's not that. It's literally, that screen capture, do a Microsoft Teams, share your screen, hit record, and then say, this is the company's process to onboard a vendor. I'm in QuickBooks. I'm going to send them a W-9, and they're going to send that back to me. Then the W-9 is going to live here and wherever my file hierarchy is in my network. And then I'm going to set them up this way. In are they selling services? Are they selling product? And then this is how I'm going to set them up in QuickBooks. And this is how I know I got that W-9 back. And then because if you do that when you're setting them up, which usually the time that you set up a vendor in QuickBooks is when they want to get paid. That's why they're always skippy on getting back your W-9, because they want a check. Like, hey, I'll send you that check as soon as I get your W-9. You betcha. Well, that then lives in the software called Trainual, and it's just a thing. It's just a little video, just as simple as that. It's 15 seconds long. This is our process for onboarding a vendor. Okay, and here's the vendor's name. Here's where you send the check to? Would they rather be on ACH or all that stuff is going to live there, and then it gives you a chance, Mr. and Mrs. Business Owner, to think about what you should be doing. And if you don't know right now, because you're like, well, no, Jenny does that. I don't have to worry about it. I'm out there selling widgets. I don't have to. That's Jenny's job. Well, what happens when Jenny quits? Then the whole thing comes crashing down on itself, and that is crisis in a business that's just unneeded and unwarranted. So having these systems and processes documented, they're easy. Just tell. When I did this, it was so funny. The first time I did this in earnest was with Bosma Business Center. My beautiful bride, after years of working for a treacherous boss. That would be me. She's working at the Bosma Business Center, running the first floor, running the building, doing all this stuff, and she was saying, hey, I'd rather be married than be your business manager. I said, okay, but I said, you got to document all this stuff. And so all she did is just, in her swan song as she was wrapping things up, it takes about a month as you go through a monthly cycle. You're just gonna, like, everything you do, you just document, and then when you're done, you have it all in one place. It's not that. It's just, and have the people that are currently doing it, right? So you don't, for you, Mr. and Mrs. Business Owner, you don't have to think about it. You're like, okay, just put it here. Okay, does this make sense? And then every now and again, ask somebody out in the warehouse. Ask some, hey, why don't you try and figure out how to add a new vendor? See how good that video is that Debbie did. Right? It's just an easy way to do it, right? Low impact, easy skeezy, lemon squeezy. So, but that's where, 1099s, 1099, and miscellaneous and NEC do at the end of the month, but really do at the end of February. But you got to get skippy with getting all that information from your vendors. The other thing that you got to be smart about, and this one is a big thing right now, it's really kind of sucky, but beneficial ownership information, BOI. This is a new thing, right? So this isn't something 1099s you do every year, but beneficial ownership information is something that your elected officials conjured up to see if there's crooks and robbers and bad people that own all these incorporations and LLCs. And so now we have a requirement that if you have a limited liability company or partnership or corporation, I have to tell who is this? What arm of government is this, for crying out loud? FinCEN, Financial Crimes Enforcement Network, that you have to tell the Financial Crimes Enforcement Network who owns these companies, who the beneficial owners are. And if you don't, there's a $10,000 penalty. So I have a Facebook post. It's a couple weeks old, so just scroll down and you'll have to suffer through my tomfoolery on my Facebook page. But you want to look at that. If you're a business owner, you want to look at that. And the other thing that is in that post is, again, $10,000 penalty if you blow it off. It's due at the end of the year if you have a new corporation. All that stuff is in there, but you got to get that thing filed. Now, the other thing is, every scammer on the planet is saying, oh, hey, we're the Financial Crimes Enforcement Network. Here, click here to give us your confidential information. And they're just scamming you. So that's where you have to go to the official government. If you're not in fincen.gov, FINCEN.gov, you are in the wrong place. Do not put your confidential business information there. You're being scammed. So that's where you want to be able to and this is a new, right? So if if you're out there and you're driving around, pull over, send a text to your office manager, say, hey, listen to Bosma, or go to Bosma's Facebook page, and this whole BOI, beneficial ownership, tell me what we got to do. I don't want a $10,000 penalty. There you go. Little nugget for you. That was free. Speaking of free, phone lines are open, 775-852-8255. You got to have tax questions, because the insanity of our current status of our tax Internal Revenue Code is Albert Einstein had a great quote. It is basically that I'll summarize it, is it is impossible to understand the Internal Revenue Code, and that was back when it was easy. Now it's just, it's just insanely hard. So, most tax preparers now, actually most tax preparers are getting out of the business, candidly. I was approached by another CPA firm in California. We purchased one in Chattanooga, Tennessee. I've seen more CPA firms go out of business in the last 4 months than I've seen the last 30 years. Get your mind around that, right? Because basically nobody wants to be in the tax preparation business anymore. And so, if you're busting your CPA's chops about, you raised my rate $10 last year, reconsider because, in fact, Eide Bailey, they're probably the largest CPA firm here, at least for a little bit. So we're going to eclipse them here by next year. But anyway, they are purging their clients. I got, and all of a sudden you think you're a good client, you're valued and valuable, and all of a sudden there's like, and you get this crappy email in January. You thought you had your taxes all lined up that says, hey, if you don't pay this, if you're not paying us this much money, or if you don't have this, I think their threshold was if you didn't have $1 million of income, we're not interested. Just go away. And that, it's just, and it's there's no CPAs out there. There's no talent. Basically, there's, and so it is. And the people that are out there, don't want to work that hard. So it's like, and you have to be able to, create a working environment for your team that is going to make them want to stay. And I think those are things, just, the landscape of the, CPA practice right now. So really what we're doing is we're asking other CPAs, why don't you just come practice with us? And we can do this together so we can kind of cut out some overhead and have a systemized way to get people trained up to get going, doing the tax prep. And, but the good news is, last year, Keystone CPAs, last year we had me as principal and two managers, Cody and Casey. I always combine that to make Katie, but Cody and Casey, great, been with me for years. And then our staff. Well, what's interesting is as we've scaled this year, in the last, I guess, 6 months, 6 months ago, I brought on a partner out of Naples, Florida, Bob Marsh, great guy. He's been on the show. But then in the last week, I brought on 3 managers. So that's how much new work is out there. And again, firms are purging. And so we said, hey, we think we have a unique way of looking at this, that we can attract talent and have gotten some great people, probably, but only one of them live in Reno. We're a national firm. But it's just a different landscape. And I'll tell you what, man, when I've seen all the mess that these other CPAs have left behind, and we fix them, right? I mean, I think I've got 30 audits going right now, and so I can go in and take a look at a problem. And if you, in fact, I would say if you got that frightening notice from Uncle Sam, and you're like, you're being audited, it's just, and these are 2021 audits, give us a call, 775-786-4900. We have a very efficient way to get through them. Again, I got 40 of them going right now. It's just, and these are other CPAs that did the work that are hiring us to defend these audits because they realize they're over their skis technically on this stuff. So, but that's just, I guess, the landscape in which we're practicing right now. It's a different world. All good. But as I was kind of the genre of the show today, talking about, the mistakes people make in selling their business is, if you'll recall last segment, the number one thing, the big thing really was, that the business can't run without the owner. And, and I think those are things that as entrepreneurs, we're so inextricably connected to this business that we wouldn't think of it running without me. So that's where, as I've said in the past, the best way to find out how the business would run without you is to leave it. Start with a week. Go take a vacation for a week and then decide how you're going to delegate those things that need to happen to other people. And it's all of it. It's not just the frontline stuff, it's the back office stuff. Don't just have it pile on your desk so when you get back you got to work twice as long to get caught up. But see how the business runs, and it's been cathartic. I've got a good friend of mine. She took I told her this idea. She ended up taking a 3-month hiatus from her business, and she said it was the best thing she's ever done because you can cheat being away for a week, but you can't cheat being away for 3 months. And the deal is that they would not be available on email. It's probably sending quakes and shivers through our listeners, right? No email. Now you have it, so if you have an emergency, you're not going to let your building or your business burn down because you're doing this experiment. But it is a really, really powerful way to help a business owner think about being able to sell their business, because they can say, no, and guess what? You tight-wadded business owners, I'm one too, I understand it. You have to pay people to do the work that you're doing. You're not free. So speaking of free, when we come back, I'm going to give you the big aha, the big takeaway, the number one thing you need to know before you sell your business. It's Bosma On Business, News Talk 780, KOH. Welcome back to Bosma On Business. Your host, Mike Bosma. It's funny. I was thinking about, I always tease that up, right? The number one thing, the big aha, the big takeaway. And then I was like, I wonder what that is. And I was like, oh, wait, give me time. If you need some help selling your business, and I would tell you, probably the best way to explain it is this same paving company that I had this interview with. We got done with a call with a prospective buyer, and I talked to, I called the owners back, and I said, how did that go for you? And we talked about it. Told them all the things, how to start to, pivot away from being the day-to-day in their business. And I asked, I said, well, how is the process going for you? And she said, the owner's wife said, actually really, really good. Like all the stuff we're working through right now, the owner's brother sold his business a couple of years ago, and it was a mess. It was a hot mess. Okay, now, but like all the stuff we're talking about now, these are all the problems that they had. I go, oh, they used a business broker. So, and it is difficult to really kind of get your arms around what we do when we sell your business. But basically, because we really care about helping people exit their business well, and not about just say we just need listings. We get your business ready to sell. So I'd say the biggest thing you need to be aware of is, if you can give me 3 years of runway before you need to sell your business, ideally 4, but minimum 3. I can increase your enterprise value by at least 25%. So think of it this way: if your business is worth, actually this happened, it's an IT company in Southern California. Their business was worth $1.5 million when we got to them. And then they said, hey, we got a couple years. So we went in and put them on full accrual. And I remember the owner, he's cranky. He's like, well, why are we doing that? We're cash-based taxpayer. Because buyers want to know how much money you're making, not how you're planning for tax. And he said, well, when you got done, was that exercise all worth it? Yeah, because we started, you were worth $1.5 million, and now you're worth $2.2 million. And he goes, well, how does that work? And I showed him. He goes, oh, I didn't know it worked that way. Right. There's no way you would. So, we get your business ready to sell, and we unwind all the tax planning tomfoolery that you've done. We call it reverse tax planning. All that personal stuff you put in, we take it out. If it's not needed, back it out. Stop it. And that way, when you go to sell your business, you don't have a whole bunch of ad backs that the SBA hates, buyers hate. They wonder, like, are you really a crook? It just messes up. It queers the deal. So we're saying, hey, we have this kind of proven process to get your business valued, cleaned up, revalued, and then sold. And then when we take it to market, basically we know the language that buyers speak, and it is some combination. It's really a small version of an investment bank. So if you were going to sell your business for $100 million, you wouldn't hire Keystone or NAI Alliance. You'd hire Goldman Sachs, and they'd have a legion of accountants and consultants that hit your business, and it's all and it costs a ton, but that's okay because you're making a ton. So, but these smaller deals, they need that same care, especially if your enterprise value over $1 million. And we're not only the only ones here in Northern Nevada that do that. Like there's only a handful of companies like us in the country. I think, if I look back to the 40 transactions I've done over the last 3 years, a handful of those were in Northern Nevada, but most of them are in, all over the United States. So it's a very specialized skill set that just doesn't exist here. We'd love to help you. 775-786-4900 and Bosma at keystone.cpa. Anyway, but that's what I'd say. It's just give it time. I need time. If you can give me time, I can fix your business and make it so that it's just sellable. It's more sellable, right? So anywho, enough on that. So yeah, hopefully if you use this as a kind of go back to this show, if you're going back to thinking about, hey, how do I sell my business? How do I buy business? The ABCs, 1, 2, 3s of how all that works. And did I forget to give out my email? I think I did. mbosma at keystone.cpa. So and the other thing I guess I'd throw out as a little nugget, we have seconds as the clock winds down. If you need some help on the tax side of it, sooner is better. What I found in my career is that in fact, probably the best case is I have a lady. She's actually out of the Bay Area, smart lady, psychiatrist or psychologist. Makes about $500,000 a year, getting killed in tax, sole proprietor. And I said, well, this is how you get. They said the problem is you're not putting enough money into your retirement. And she said, well, but I'm kind of tight on cash. Like you make $500,000 a year. How can you be tight on cash? Well, she has adult kids that still are now they're in their advanced degrees, and so they're still supporting them. Okay, great, and we get to. But what I said is, they'd be better off just taking loans so that you can put more money into retirement. And I showed her, basically. By qualifying for it's called the 199 Cap A or qualified business income deduction, her income as a specified services trade or business was over the threshold. If you can put it under the threshold, in her case, she got an extra $65,000 deduction. Ta-da! $65,000 at 32%, it's $20,000 in tax. So you're like, hey, then you can do that. She's her only employee. She can put up to $250,000 into her retirement account. So I hooked her up with Brian Wheeler at Keystone Wealth Advisors. Yep, he said this, and he told her, like, you have to. If you're not going to be able to retire, you're going to have to work forever at this pace. So, and when she saw how richly, she's in California, so she's getting killed in California. And I said, no, you just do it. So we did an S corporation for her, paid her wage, and then maxed out her retirement account, saved her about $40,000 a year in tax. So. And I was trying, and she's upset. She said, well, why didn't my prior preparer tell me about all this stuff? And I said, well, you asked them to prepare a tax return and you gave them the information. It's just, they did it right. They didn't do anything wrong. But this planning part of this thing is very rare, and it's kind of what we specialize in. So if you need some plan, I know the person to help you. But it does take a village. All right. Hey, if you need us, 775-786-4900, mbosma at keystone.cpa. Until next week, business owners, keep that business engine humming. It's Bosma On Business. Newstalk 780, KOH.
On air, online, on demand. Newstalk 780, KOH.